All right, so welcome the Cut team, Matthew and Ethan, to this AMA today. Welcome Arbonauts, welcome community. We're going to be talking about what they do, the whole purpose of carbon distributed technologies and a carbon footprint within Web3, real world AI, and using blockchain technology in that world.
Thanks so much for having us.
Yeah, my pleasure.
Yeah.
So why don't you just start by introducing yourselves, what you do in the space, maybe how you got into Web3 specifically for this, and then we'll jump into what Cut does specifically.
Sure. So I can start. My name's Ethan Gilmore, and I'm a co-founder of Carbon Utility Token, along with Matthew Pickup. And look, I started working in hedge funds and in media and also alternative finance. And I heard about cryptocurrency in 2015, and I was lucky enough to cross paths with Matthew and our other partner Paul Thompson. And basically the whole idea, and it wasn't my idea, I believe. I'll let Matt go into it, but Matt's like, hey, why don't we make a cryptocurrency that's backed by certified carbon offsets? And I thought that was a great idea. We started working on that. Before that, I'd come across other crypto projects. I had also, bought various cryptocurrencies, and I was really interested in just the distributed nature of it, and the opportunity to use distributed ledger technology also for carbon offsets really seems to solve a lot of the problems. So I thought it was a great use case, something we could get behind, and really happy to be here.
All right,
Awesome.
thanks.
Yeah. Matthew Pickup, I'll take a quick run. My background pokes around a bunch of different renewables type things. Here in Atlantic Canada, where I sit, we have some of the world's, well, not some of the world's strongest tides. So one of my maybe 5, 6 years ago was involved in a massive scale kind of tidal project our grid is something like 60 to 70% coal, which is pretty pathetic. So a lot of the kind of green innovations and different things we were trying to work on had a pretty massive barrier around our power infrastructure. So worked a bit in development of solar technologies as well, and in the back end of all of that, a lot of data infrastructure play, from the earlier days of cloud, and the hardware side of how much power and efficiency does it make to do the things that we want to do, and where that interconnects with grid. So kind of the precursor to where before Cut and the Web3 kind of space became anything close to what it was. A lot of these renewable energy projects are producing carbon credits and attributes and offsets and RECs and all these different worlds of people basically being able to monetize the good work that they were doing. So we were doing stuff like we had a pilot with a chain of coffee shops where every time somebody sold a cup of coffee, you'd get like a nickel worth of offsets from some local methane destruction plant or something. So kind of building like cyclical connections between the actual real world things we're doing, and something that's actually beneficial to the environment. And the back end of all that, at the time, we were using private ledgers. So our own private network. We had a DLT running on solar panels, and a hydro plant, and we were just running all these carbon transactions of how much footprint was going into that coffee and its shipping, how much of our offsets that we put on the ledger, and kind of where that all builds up towards, where we're hoping to take Cut for the next very far into the future, is kind of bridging that real world, but being able to open it up for people out there to be able to, whether they're going Etherscan and interacting with the ABIs that we'll have posted up, or as we expand out the type of applications we use for people with calculators and things like that, is to kind of take things that we have, we started in very, very simple ways, very minuscule footprints, running hardware and server machines that run off 25 watts or less that are running these ledgers, compared to, at the time, Bitcoin and Ethereum were kind of the biggest shows in town. Now there are a lot of other, you're talking to Arbitrum, so a lot of other layer two scaling, the merge and F is starting to drive those things down. But that just adds more potential for innovation. How can we take things on chain, things in Web3, and program our smart contracts to be either auto offsetting or future offsetting, and then to go after the real world as well. There's a lot of things happening. Sorry, go ahead.
It was just to back up a bit. So when you say
Sure.
offset, like carbon offsets, like can you explain that for the community basically in simple terms?
Yeah, absolutely. Just down the highway from us here in Nova Scotia, as an example, there's a facility, and their business is selling power to the grid. And the way they do that is they suck a whole bunch of methane that's coming off of a landfill, and they, in the process of destroying it and turning it into other elements, they sell the power. But also in that process, they're meeting certain certifications and verifications from separate boards to say, in doing this, you've created a green asset. We'll call it carbon offset right now. And based on how much more harmful this gas is than carbon, you get 3 times the credit. A lot of people in the carbon offset, carbon credit world, it's logos of forests and trees. Some people would plant trees and say, in the next 100 years, you're going to have accumulated this many offsets. That's kind of the forestry type of approach to offsetting. With cut, we focus more on tangible things that have been kind of accrued to date. So something like you're capturing a dangerous gas that would otherwise go in and harm the climate, and by capturing it and turning it into less harmful elements, here's the carbon credit, the carbon offset have that sits on your balance sheet like an asset or something like that. If you don't happen to need that to become net zero or to become carbon neutral, but the cement company down the street is dying for ways to kind of meet more environmental metrics that aren't possible in what they do, then you can have a transaction between the two where you say, okay, great, you've got a surplus, I'm in need, we agree on a price for a volume, and that's how the transaction works. And kind of where the difference in terminology, simply people saying carbon credits, usually that's a regulated environment. Someone saying, the government says you have to have this much carbon credits to offset your shipping, and offsets is more like the voluntary world where people are not necessarily mandated to do it. And there's not necessarily a set exact rules of what you have to meet. But that's kind of where those terms often is very, very similar meaning, but that's kind of the line down the middle. Credits are regulated. Someone's making you do it if you want to get a certain contract or be allowed to operate. Offsetting can be more, whether it's not just aesthetic or marketing, but you're not being forced.
Right, kind of like when you do your taxes, you get tax credits for certain things, or like the government will incentivize you to maybe buy something that's a little better on energy, and you get a credit for that at the end of the year or something.
Yeah, totally. And I think it underpins the idea that a lot of people, ideally, may be very passionate to say we want this to be a net zero operation. We want to have a no carbon footprint in what we do. But we ship these parts from China. But this process, it's unavoidably, there are certain pieces that, carbon credits and carbon offsets, they're not going to be the one golden pathway to, the future and health of a planet that we want, but they absolutely are a tool that can help in a whole bunch of different ways, along with transition to renewables and other things like that.
Right. So the idea that we don't have like the answer, but we just have different tools to help in the meantime.
Tangible places to start is definitely something that
yeah.
I think sometimes we're grasping for that. And big visions are amazing. We have lots of big visions, but we also start with, you can actually show how this cup of coffee was tangibly offset in a real way, and start from there, grow from there.
All right, great. Well, it's a good overview. So then I guess we can go right into, CUT itself and an overview of that protocol and ecosystem.
Yeah, I mean, really, our mission for CUT is to utilize blockchain technology to offset the carbon footprint of the real world, Web3, and also AI. So, the use case for getting offsets on chain that solves a lot of problems, because we deal in the voluntary carbon market, and when you utilize blockchain technology to track the provenance of where offsets were generated to combat fraud, and also when those offsets are retired to offset, say, the production of a tire, or to offset, say, an NFT, or also you want to, we're seeing a lot about Chat GPT and others. There's a massive carbon footprint there, which is being better understood. All the especially with all the new technology that's being created in visuals with DALL-E 2 also, those all have a carbon footprint. So getting our offsets on chain from landfill gas capture destruction, tracking the provenance, and it also deals with the fact there is no universal price for voluntary carbon offsets. So blockchain technology is a really elegant solution for a lot of these problems of provenance and retirement. But also, our thesis is getting offsets on chain makes offsets more valuable, because not only can you have real world applications, you have applications in Web3. We have the ability to speak to layer 2 scaling bridges such as yourselves that help people save money on Ethereum, as well as potentially, we might be able to lower the carbon footprint of that as well as AI. So that's our mission. And I don't know if you talk about the overview, but that's really what we're after. So I didn't know if you wanted to start there, but I wanted to add that.
No, happy to start wherever you guys want to. Matthew, you want to elaborate on that a bit?
Yeah, definitely. And I think it wouldn't be if you're into the crypto space or wherever you're watching tokens in the last few years, seeing the word carbon attached to one wouldn't necessarily be blowing the doors down. Like I've heard of, this person does sequestration on farming, or this person is partnering with this registry to, it's not novel to say people have figured out a blockchain, a backbone ledger, getting rid of trust, double counting. It's an amazing use case. After, Bitcoin and currencies and other things, it's one of the most kind of like perfect use cases for a trusted, immutable ledger to have. And where we kind of have, where we're finding our strokes are different from a lot of the things that we're seeing. Probably the first we touched on loosely was, we're not saying we just planted 10 million trees, now go run your fossil diesel ships forever, because that forest could burn down. Those trees may never grow. And it's not an anti-forestry thing. Grow all the trees and help, the lungs of the earth. Breathing is an amazing thing to be doing. But it's not something that can be as transactional as, it's already been set in time. So we focus firstly in our registry that, these credits or these offsets are already occurred. It's already things that's happened. Things like biomass facilities that are gathering up waste wood that would normally sit and decompose and using that as fuel. That's another thing that we have in our registry. So the type, that's one. And secondly, that we're not just trying to build integrations to registries to say, okay, using this, let's go plug into Vera, which is a very well-known and respected one, or let's go plug into this other token. We actually have our own unique registry. So when we launched this project and did some fundraising, it wasn't just to build a bunch of tools and hire a massive team like we would have loved. We went out and bought a lot of carbon offsets so that our registry was actually seeded from assets that our company actually owned. Because there's been so much, I don't even need to, it's so cliche to talk about FTX and other things in the space, but we went to a regulated jurisdiction, set up a company that's real, had actual assets put on a balance sheet in a registry that was ours. And those things don't always sound as exciting probably than some of the really next gen technology things, but at least it gave us a really secure base to build on. So I talked a bit about type, and that is another highlight, is that we have a registry of offsets that there's no risk of double count, because the bill of sale comes back to a European company that is owned and operated by ourselves. So it is our registry truly, and it'd be awesome in the future to find different ways of integrating with other sources and projects and providers, but really to help eliminate the doubts that come with people, because there's already enough difficult to understand these things. Carbon credit, it exists between certifications and documents and paper, and like, what is it and who owns it and whatever else. To really help give people some kind of confidence that there's something here, and I don't have to worry that it's actually being sold in triplicate in 3 other spots. It's a place to start and come and build on something you can trust, and you can see it's already happened and it's only in one spot with us.
All right, cool. And then you guys say you're a compliant ESG asset. So you want to explain what an ESG asset means?
Yeah, sure. So the compliance that Matthew just referenced, I mean, we set up in Liechtenstein under the Blockchain Act there. We really like Liechtenstein as a jurisdiction from my time in hedge funds, and it's a well-recognized institutional institutional grade jurisdiction, and our lawyers actually helped pass the Blockchain Act. We worked very closely with the Financial Markets Authority. We've also gone through the process of obtaining Swiss banking, which in the crypto space is very, very difficult to do. We've done all of those things. So when we talk about ESG stands for environment, social, and governance. And what's interesting about ESG is that asset class. I think it was Bloomberg said that the asset class for ESG is currently 30 trillion in size, and it's forecasted to be 50 trillion by 2025. So when you look at what we are at Cut, we are actually part of an asset class that is multiples larger than the entire crypto space. And we've also completely removed a lot of the regulatory issues because we are compliant. But because we are compliant, a lot of people, we've, as Matt said, we've gone through and done a lot of the hard things where we've gotten a balance sheet. And we also, for compliant purposes, after getting established there, we really weren't allowed to do any marketing for the first year. And we've been in beta just building working tech. And we're coming out of that this year. So we have a bunch of announcements that we're going to be announcing. But when you talk about ESG and compliance, I mean, we're offshore. We have no U.S. presence, even though we are a utility token. We are in Europe, and we're part of an asset class that is growing, and it is going to be 50 trillion by 2025. So, here we sit in January 2023. We're really happy with the where Bitcoin is right now. Obviously, last year it was great to not, it was great to put that year behind us. And but I mean, that's really when we say we're compliant, we're part of the ESG, we're an ESG asset class. That's what we're talking about.
Okay, cool. That makes a lot more sense. All right, so where you're compliant, you've registered in Liechtenstein. So then when you want to do integrations and partnerships, what does that landscape look like for like this genre of protocol?
I mean, Matt, do you have any thoughts there?
Sure, definitely. And it's funny because I know when you want to come and talk the most exciting of tech and the coolest projects, in the world and the space that are happening here in Web3, using the words like compliant and regulated 17 times, we had a lot of people rolling their eyes really far back. Those same people kind of called us back after things in their space started to fall underneath their feet. They're like, so can you be leveraged 8 bajillion times? Like, well, can we make this interesting Wall Street type financial product that you can do this for? Like, not really. And it wasn't interesting at the time. But when we talk about integrations and future building, we offer exactly those kind of, I'll say boring to be hard on us kind of things, where if you want to plug into this scaling solution, you have like the future proof audit of anybody coming back and saying, oh, great, you just spent truckloads of money on this carbon token, but now those kind of mangrove forestry, something offsets aren't in vogue anymore. So all those things are kind of defunct. We're kind of taking slow steps to do, simple integrations that we can tell people are going to be defensible over time. Everyone has as a service. Ours is retirement as a service, because you can buy and accrue and trade these different things. But the retirement of a service is, we're not just an ERC20. We have a network of smart contracts that track this registry, and you can signal at a certain point in time, I had 1,000 of these. At this point in interacting with the smart contracts, I took these, 30% of those and retired them immutably forever, never to be seen again. And it's not just burned where you just send it to 0x0 forever. There is some more kind of smart contract tracking on top of that. So you always kind of have a deeper history and understanding. And that's really important for a lot of integrations, because other than that in the moment feeling of I pushed the button and went boom and it went away, some people looking to get into this space, it's not just the retail person who wants to offset their flight to London. It's a corporation who's saying, great, we want to do this stuff, but my CFO actually wants to see a certificate or something. And we can show them a transaction online that's backed by a whole bunch of, metadata, registry data, that at the end of the day comes back to a desk in Europe with actual paperwork, with things that we own. And those integrations kind of allow us to go a lot of different directions. Because of what we love and what we do, we're pretty focused on the Web3 crypto space, things we can do on chain. So many great ideas just by a successful future scale themselves into being, bad for the environment. And even if they're good for the world in a million ways, the bad for the environment part just gets them followed by a lot of well-meaning trolls who saying, "Great, you're doing this awesome thing. I'm glad that your chatbot can now solve all these problems. Now that 50 million people are using it, you're burning up specific holes in the ozone because of all the stuff you're doing." So while we transition to that, while you're doing something really cool and emerging, let's put you in some kind of a safe sandbox where we can be doing these things offset. And again, it kind of trickles back to our pre-cut life of servers and efficiency, and always trying to find the bare basement, simplest way to do these things. Cut helps if you want to do something that you haven't figured out, a real strong green infrastructure way of doing it without just stringing up a bunch of AWS or whatever else that you're not necessarily sure. Go and innovate, start building that awesome thing. We can make it net zero from day one. And hopefully, as it grows and matures, even more solutions come on, that it's not just always doing something bad and offsetting, but finding more mature, efficient green solutions that as you scale up.
Right. So as I'm understanding it, I have a project. It solves a bunch of problems for people online. Then a lot of people start using it. It starts to have a larger carbon footprint. Offsetting is the process of basically making it so that whole process comes to net zero by the end of it.
Yeah, absolutely.
Okay, and how would they, integrate cut or integrate your guys's system into my bot that has 50 million users? How would that? Can you kind of paint that picture?
Definitely, and it's always. This is what the good and the bad of living in the voluntary market is, or in a regulatory environment. Someone says, "Here's your sickness, take X amount of medicine." In the voluntary world, the calculations become the most important part of, what was my footprint? What were my emissions? How do I get an idea of these things that may or may not be as simple as an invoice or a bill coming to me, or I'm spinning up an instance of something somewhere, but what's the best guesses on that? The process of actually offsetting something, if you have that number, is incredibly simple because, our smart contracts are all built on Ethereum tools, the integrations that the community has built for so many, crazy amounts of use cases, blockchain integrated apps, real time offsetting. Those kind of things are very seamless to integrate with us as a retirement solution, which was kind of part of the thinking going back into it. It's one of those active communities in building amazing things in the open source world. It's the calculation piece that probably is a bit stickier at the exact moment. Is what was the exact footprint? We can work with you. There are a lot of tools, an online flight calculator, estimates of what somebody might tell you your data actually has as a footprint. I'm not making it sound simple because it's not necessarily. That's if you say, how do I integrate and know an offset? That's probably the stickiest part, to say, well, what is it exactly that I'm doing, and what is kind of a trusted, number.
Well, I
That's
guess more
else we'd like to part in.
A practical example, because you guys are focused on it, is the AI machine learning. So like the DALI 2 one, a bunch of people start using it, and then it creates like a huge congestion online and using, computer power, processing power, and then that's obviously going to create a huge carbon footprint. So like I guess if you can simplify that.
Yeah. I mean, sure. I mean, look, there's an element where, we'd have to have some API integration, and we'd also have to there's an element of customization, because if we're going to offset something, we have to actually go through and calculate the carbon footprint of whatever, whether it's a legacy service where someone's, making tires, or their corporation is traveling on jets. Those are different types of calculation. For something like DALI 2 or Chat GPT, we'd have to go through and work with them a little bit to see, basically what their data center breakdown is, what are the power sources of those data centers, where are they storing that data, and then also, the machine learning engines that they're using, what does that look like? Because and this is as it's very cutting edge, and we're hearing more and more about this technology every day. But it won't be that difficult to actually go through and calculate this. But we do have to work with a company to get a good understanding, because what we also don't want to do is just wing it and undercut and say this is now a carbon neutral product. We've done that, and we don't have a good understanding of it, right? It's kind of like if shoes are a simple concept, but you still have to know your size, right? And that's what we're going to have to go through and do measurements. So if we were to work with you guys, with Arbitrum, we'd go through and look at what the carbon footprint is of your layer 2 scaling, and we'd figure out a way to offset that, either fully or partially, right? The other thing too, like there's even, carbon is created by making coffee, and you can break that down and say, okay, this is the carbon footprint of a large coffee. We'd have to go through that. And we can go to much larger of, even sports teams. They're like, okay, you're flying around for the season is generating X. That's a pretty simple process because those calculators exist. But we do have to go through and integrate and get a good understanding of what the carbon footprint is of a given product or service, and then we'd go and offset that. And then you'd also have a receipt of that on the blockchain when you retire it. So you can also show everyone that you are going, if you're going after ESG type funds, if you want a green certificate, obviously blockchain technology gives you that receipt, and it's a proof of provenance and also retirement. So I don't know if that answers your question, but that's how we would go about something like that.
We've had a little success too with, and again, it does depend on the exact type of scenario, like using webhooks and different things to say, if you can find the trigger, what is it that I want to count? How many times you've done this? Or the webhook is into a POS system that says this menu item has X. Had some success in just building relatively automated databases, and you just kind of sit back and say, great, it's plugged in now to the webhook picks up every time you send out this large latte, and that has this. So this gets sent into that wallet and retired. Great. Other things is more like where we've tried to collaborate as best we can as different communities out there who are opening up a bit of a menu of not just footprints, but, given this activity. One that we used early on, Carbon FYI, they were doing, put in your, Ethereum address here, put in your NFT address here, and they have some kind of methodology that says, great, based on the history, this is the footprint. And that's the number again that we say, okay, great, we've got an actual number, let's grab it. This is now offset A against B forever on the blockchain. So I think it's a part that needs to emerge more. You can grab some secondary research on a whole bunch of different footprints, but for a lot of people, whether it's individuals or groups or projects, they want their own number, and making that number educated and defensible is kind of another big part of this journey to make it real. Not just doing best guesses and you can gross it up 20% and say, well, we definitely got it then, but we do want to get, as time goes on, the more and more exact footprints we have, the more valuable that being able to offset those becomes, because it's not just, a lot of people are often talking about like, what's the pricing of this, or how do I justify pricing of that? It's really, what's the value of saying that my protocol that I've calculated and have now forever been made carbon neutral, what was the real value of that? And in some cases, it becomes pretty immense, what the value of programmatically wrapping something in as a, carbon zero solution starts to get really, really interesting.
Oh man, this stuff it's like I understand it at the surface, and then I try to think about it on a deeper level, and I'm like, I wish I like learned more about this stuff just in school alone.
It's a rabbit hole for sure. It is. It's its own rabbit hole.
And then you tie in Web3, and it gets even more complex with smart contracts, but also kind of makes sense, just theoretically.
Yeah, I mean, when we started this process, I mean, DeFi wasn't what it was. Decentralized exchanges they didn't have very much volume. And, everybody had spoken about AI and machine learning, but it continues to grow, and more opportunities as we've gone through the process of establishing our AG and everything like that, our company in Europe, and, getting Swiss banking and, getting offsets on chain and being compliant. It just makes us more valuable, because the use case for this and the opportunities to offset not just the legacy real world that we live in, but also Web3. And we have no applications either in quantum computing yet. There's all different types of data that's going to generate, and it needs to be rendered by classical computing. I mean, all of that is going to need to be offset. So we really are very bullish and excited about the value proposition of getting offsets on chain and utilizing DLT technology to prove provenance and retirement, and also fix the pricing problem that doesn't really exist in the voluntary market. It's a lot of layers, but it's the use case continues to grow for us.
Yeah,
And then what other?
It's also go ahead,
Matthew.
I was just gonna kind of tag onto that, saying it was quote unquote, difficult or interesting enough, 3-4 years ago when we were doing these kind of things, but it was really about convincing people that there was, a need. And not to say jump the curve, because everybody's known about carbon credits for 20 years. But now that we're having people approaching us, and it's not just a marketing push or tweet of being sustainable, it's that we're trying to get into the EU, and they start asking us questions about our commitments to our ESG goals, or how we're tracking or offsetting our carbon. Once it starts to becoming a bit more mainstream, like this is blocking us from being able to take on investment, or this is blocking us from being able to enter markets that are really getting a lot further into this space, it becomes much less about just a cool certificate you can make online, which, for me personally, and a lot of other people already is an interesting checkbox. I can track and offset and have this keepsake of how I've done this forever online. Great. But now we're starting to see much larger ticket folks looking at the space saying like, well, I need to be able to prove that, and I need to do that. So we're trying to offer that door that people can come in as well. It's not just about purely aesthetic, fun, good feelings and marketing only. It's really becoming a barrier for folks, and how can I do it in a trusted way? And we're trying to walk that line, as well as the retail side of just, I have my apartment or my flights and whatever else. How can I know and get it offset?
So with the offsets on chain, are those like represented as tokens or fungible tokens, or as non-fungible tokens when it comes to the contract type?
Once they enter into our registry, they're all fungible. To a certain point, I kind of alluded to that. There's some additional tracking that'll always be known. This that you retired came from this exact site in this geography. But to enter into that kind of fungible registry of things, it does have to meet a bunch of kind of base requirements. So with a lot of the pioneers in the space in the area that we were able to work with in the early days of the project, to have trusted bodies and certifications under, like, ISO has an environmental suite of certifications, for an example. So if something has this ISO level accreditation on it, that would be one of the high ranking factors to be like, okay, great. And it's additional and already achieved kind of offsets again, then we just add them to the pool. We haven't entertained an NFT kind of option where these kind of ones are better or not. They're already kind of, if from this kind of chemical or this type of project, they're all taken to a baseline of carbon anyway. So they're already kind of equal in volume. We don't spend as much time as a lot of folks as well looking at vintage, like, well, this was last year's or this one was 5 years ago. It's really just, the impacts and effects on the atmosphere for people who are meeting a certain high watermark of jobs. We want to help that organization grow. So if we can help connect people who are looking for exactly what it is that those people are offering, we're kind of offering the gears in between. We helped them sell 50,000 tons last year through using our registry. It's going to help them amp up their equipment to go capture more methane. That's going to help them staff up and expand processes. And really, that's when we'll continue to feel like we've done something of some use, and that we can connect that impact. And, they're going to go expand that impact, literally have tangible climate impacts to the positive. That's what we built CUT to do.
And with the different verticals you were talking about, like AI, Web3, those are more generic. Are there more specific parts of Web3 where you see yourself getting involved, like on the transactional side, like exchanges, trading, DeFi apps?
Yeah, I mean, obviously, the opportunity to utilize cut to offset. I mean, we would love to work with someone like a DYDX, to basically help make and other crypto exchanges as well, both in the DeFi space and centralized, to enable basically their exchanges to be carbon neutral. We'd also be really interested in working with content producers. We have an explosion of content being created, both with AI and also just through just good old fashioned regular people creating things as well. And I do think we've been hearing a lot about there may be a need for NFTs to come out to identify AI created content versus human created content. There could be an opportunity for us to utilize cut to make those NFTs carbon neutral. We would also love to work in the payments vertical, the layer two, obviously the layer two bridging, like what you guys are doing. We'd love to do that. And there are other things that are coming up all the time that we're open. The number one thing though for us was to really deal with the regulatory issues, make sure we're compliant, we're a utility, and then be able to go from there, because we really created cut to an institutional standard. And that's something that it's taken us a while, and we've been really quiet. But we had to start there with our foundation, and then we can grow. We can grow, and we have some major companies right now that we're talking to and working with that wouldn't have decided to go with us if we weren't compliant and had a balance sheet and a legal opinion and all of these things. But you never want to say you're going to be everything for everyone, but basically, the real world Web3 and AI all are going to need to be, carbon neutral. There's elements too that we're seeing of satellites. They have a carbon footprint. There's a lot of different applications. So we're really excited about the future.
Yeah, was that a wrap-up applause, or you just really like the answer that much?
No, just to emphasize the answer.
You kind of. I can add a tiny tale because you talked about exchanges, and the merge, because we're built on Ethereum, actually helped expand the focus even a bit more, because when we first had this on mainnet and you want to say, great, I want to retire this, the gas transactions alone, it said, okay, great, well, let's track it for a month and we'll batch retire. But a lot of mainnet fees dropping made certain things a lot more possible. The layer 2 scaling, so just we're able to focus a bit on smaller things. Like we've had a large exchange approaching and saying, could we just attach a little bit to every thing we do and say that every trade here is carbon neutral? Like, would that be helpful to your users? Absolutely. But it was difficult to do micro on-chain retirements constantly with so much gas. So F2.0 has helped get rid of a bunch of that. Layer 2 scaling solutions help, because it is you want that immediate return to say, I pressed it and it returned, and it did. It wasn't always possible with an $18 gas fee. You know what I mean? So I think that those micro type transactions are even more so what we're targeting to get into as well.
And then when you say layer 2, like, how do you guys see yourselves integrating into Arbitrum and using that layer 2 technology?
Yeah, well, we kind of similar to where I was just chatting on, is that we try to offer and saying, you're doing these things with a footprint, let's give you a sandbox to be clean. We want our own sandbox and places that we can go and have more kind of robust tracking retirement activities, and be having all these things not always happening on mainnet, even though the gas has gone down, even though it's been, for us, if we can say, great, we just bridged over 10 million tokens, and now we can push all of this performance data and emissions data onto this layer 2 and have a bunch of retirements taking place there is one way that we see it happening. Another kind of the flip side of it is, even though layer 2 has, compared to a lot of them networks out there, significantly, ridiculously smaller footprint, there still is some. In some ways, that's a more appealing one to say, great, we don't just need to try to make some kind of commitment towards some small amount of emissions. We can go completely carbon neutral with our entire network, or this entire bridge can be totally carbon neutral. So we want to be a feedstock for those who are looking for the solution, but also using these for us to get more opportunities, more transaction, more acute tracking of exact things that we're offsetting without creating more footprint, because we use the same things as we're out trying to find the footprints of the smart contract we're running on mainnet to offset all of our own contracts that are offsetting other people's. It becomes more circular the more types of things like this we have to do. So layer 2 helps us simplify and do a bunch without incurring, additional footprints and trying to help.
Yeah, well, I think something people don't always realize is with a lot of layer 2s being built on top of Ethereum, so that we can scale Ethereum, solve the scalability side, B, continue using the security and decentralized side of Ethereum at the same time. When gas fees go up on layer 1, they subsequently go up on layer 2 as well,
Right.
with rollups. And so a lot of people have to also remember that once we're in a bull market and there's daily high volume in transactions, that the gas fees we're seeing on layer 1 post merge are still going to go up quite a bit, and the need for layer 2s and beyond are going to continue to grow.
Yeah, absolutely. I give you applause for that one. That was good. I applaud you back.
Yeah, let's make it official. Hey, welcome back to the stage, Ethan. I saw you.
It's dropped off. Yeah, no worries.
Got flooded down the street.
Welcome to Twitter Spaces. All right. I guess when you guys were talking about like other parts, other sectors needing to be doing this kind of thing, is there a lot of other companies doing this kind of stuff with carbon offsets? And the first thing my mind thinks of is there can never be too many. You want to dive into that a little bit?
Yeah, I mean, look, this is when you think about climate change, and I completely agree with that. I mean, we are not competitor obsessed at all when you talk about climate change. When you look at, if Russia, China, India, the United States, Canada, and Europe tried to tackle climate change, it still wouldn't be enough. You need the entire world to do it. You need a lot of different avenues to do it. And there isn't one company or even 10 companies in the world that can satisfy the need and address climate change effectively. So we're one of many. The opportunities to collaborate, we're open to it. And I mean, again, people always say, "Oh, what do you think about this company?" If any company is out there trying to actually address climate change in an effective way, we're very happy to see them, and we hope more companies get in this space in the future, not less. Competition is good. The opportunity to collaborate is also very good, and that's this is a major issue. I mean, I'm sitting in California right now, and we've had more rain, and we've got flooding, and this is pretty abnormal. And climate change is certainly something that we're all aware of, and we all need to deal with it. And if CUT can help, major companies, major projects, and also individuals get started doing that, that's what our mission is. To if it can help them start to address climate change. It's a big topic, and it's hard to know where to begin. And we are just one of a variety of different ways to do that.
Yeah, and there's a lot too. There's so many different geographies and requirements, and there's going to be a lot of white gloving. A lot of people making a bunch of consultant money off of being the expert, showing someone how to do carbon credits properly. As an at least, we want to be able to offer a stock of here's a registry of trusted on chain for those that happen to agree that day that with the thesis that on chain offsets have more value for the tracking and better info about where they came from and where they've touched hands. That's one part that even in partnership with dozens of other people who might be reaching out and servicing an end user in certain use cases, great. We have that stock. And at the higher level, to open it up, the best part about the tokenized aspect is if you want, it's here for you to do it yourself. If you're able to, use MetaMask or interact with APIs and do other things to help push around. You don't need that broker. You don't need that third party. You don't need that lawyer to draw up the legal framework of what is a token and who owns them. Like we've already done all of those pieces to set it up for those who say, okay, great. Well, if you're telling me this token already has XYZ, I can handle the actual retirement part myself or the custody part myself. And if you can't, maybe it's feedstock for other people to build services on top of, and saying we've got some trustworthy carbon for XYZ reasons, and here's my offering. Here's the type of niche I'd like to offer to you, and here's how I know what they need, wallet support or some fancy API into other payment systems and things like that. It's kind of where a rambling view on how we see competition. It's great, and even though we may name things that we aren't, it's not meant to be like we don't like these types of things. We're just trying to make sure we have an identity of what kind of projects we support and why, so that people looking for that kind of impact can trust that they're finding it.
Right, that makes sense. That's what I figured too. One thing in this sector that I figured correctly. Are you guys open to some community questions?
Sure.
Okay. So anyone out there looking to ask the Cut team some questions or learn a bit more about carbon offsets? I saw some hands raised earlier, but they have since been unraised.
You asked all their questions.
Yeah, it's possible. It's possible. That does happen quite a bit. We usually save it to the end to get into the community questions, and that happens. Well, you guys are able to continue to talk about what you're doing, I guess, in the short to mid-term. You're talking about making some noise. What are some of the noise you're trying to make in 2023 here?
Well, I mean, I guess we've got a lot of things coming down the pipeline. We've just been really focused on building, and we've been quiet on purpose. And again, without going into specifics, we will have some more announcements. And I'm not trying to be cryptic, but we we're looking to we have some announcements that are forthcoming, and some interesting partnerships and use cases. And beyond that, though, I think we're still working on a couple of things, and we'll be making some announcements, but I can't really go into too much detail, at least at this stage, because again, it's still pretty early in the year. But we're really excited to have this opportunity to speak to you guys and to your community, and we're really excited for 2023, and we're very happy to put 2022 behind us, as I think everyone is in the crypto space.
Yeah. Lucky for us, we spent 2022 doing a lot of direct working with folks who want to use our offering, want to use our offsets, building kind of tracking tools and back-end dashboards for them as one-off in a specific use case. But in doing that to the degree that we have, we're kind of opened up a lot more. Okay, great. Now we can offer this to anybody in this space, or any organization that's doing this type of work. We've now got great templates in place to say, great. When we meet the first, we say, I don't know about your industry, but we've gotten pretty far down the line in terms of, here's where you could enter your flight details. Here's the info that you're going to want to know about your building. You're a sports team, great. We spent a bunch of time in 2022 with the sports team kind of digging into different footprints, and now they're able to go and promote carbon neutrality. So I think that's kind of all those things, and working through a really crap year for crypto have us excited and positioned to try to roll it out a lot broader in 2023. Looks like the market's supporting us. Inflation's going to go die somewhere, and we'll be kind of in a position to go help take a bunch of people to the next level with their sustainability plans. Now that it's hopefully not as much about keeping the lights on, although it always is. These kind of new innovative ways to rebuild and grow into segments is what we're hoping to support this year with our product.
Yeah, and I imagine an insane amount of research and data has to be taken under to get through all of these processes in your roadmap.
Yep,
definitely.
That's right.
You can't just have an idea and do it. You also have to back it with a lot of,
Well, on top of that too, we have to go and speak to regulators, and that's always a lot of fun.
Right.
Yeah, they sit there, and they've been great to work with, though. It's just, that regulated approach is something we're very happy about, but it does take longer to do, and you really want to make sure you dot your I's and cross your T's, and you go through that process. I mean, we also have we're a private company, but we have, audited financials, and we've gone through all of those things to be good stewards of a company, to create an institutional, basically an institutional product. But it does take longer. It's not like we just can go launch offshore and do whatever we want without having to talk to a few people about it first.
Jealous as we may be, somebody rolls out their new DeFi payout 20,000% of something, and then everyone calls us up like, "Why aren't you doing that?" It's like, well, we're not allowed. We're not allowed to play that game. And as much as we're on the outside looking in, when a lot of those games sink, we're like, well, good thing we weren't allowed to play that game. So gift and a curse, I guess. We kind of have our bones that we have to stay in, and that keeps us safe sometimes, I guess. It's the upside.
Yeah, there's a little bit a lot of do no harm. And a lot of this stuff is an experiment right now in Web3. So you just, you have to play it safe depending on what sector you're in.
Yep.
So where can everyone here listening kind of find out more information if they want to learn more and they didn't quite fully understand what we discussed here, but were interested? Where can they find
should ask
stuff?
You. If you've been paying attention, they should just come ask you.
Don't do that.
Yeah. Our site is at cut.eco, and Ethan alluded to our head down build of the last year. We do a pretty unofficial job of maintaining the socials last year, but that's where we're going to be now turning up as we're ramping in. You can find all of our basics at cut.eco, and a lot more rolling out in end of January, and all the social places people are used to being and people like to go.
Yeah, let's get those socials ramped up, guys.
Exactly.
Will do. It's on the resolution.
We actually have a question here from DeFiBanked.eth.
Okay.
Cool.
You all set, DeFi? Got your Blueberry NFT on?
Hi. Yeah, do you guys hear me?
Yes.
Perfect.
All right, great. Always excited to hear about a new carbon project. This question is really more for the Arbitrum folks, though. If you guys could go over the logic, your train of thought that you guys use when choosing this project, the carbon utility token. Like, why this over something like Klima DAO? Were there some pros and cons? Something that you guys can probably discuss.
Not much that I would say I'm involved in to get into, but I do know Klima is on. They launched last year on Polygon, and it's a bit before my time. But as Ethan was saying, like, I don't think there can be too many, so I don't think this is the first or the last project that you'll see getting involved in the layer 2 side, whether it's Arbitrum or any other chain.
Okay, so I guess the train of thought was just that it's on the same layer 2 as Arbitrum, and so it's a convenience factor.
Yeah, I mean, anything that's built on layer 1 can very easily be migrated into Arbitrum. As you know, the EVM compatibility is pretty high, so it doesn't take much.
Well, Klima is on a layer 2 as well. It's on the Polygon.
Well, it's a side chain, but yeah.
Okay. Yep, that was pretty much it.
Cool. Thanks.
Thank you.
All right. Cool. It's a good question. All right, guys. Is there anything else you want to add, or?
No, I think
no. A few minutes back.
No, but thanks so much for having us, Matt. Did you have anything you wanted to add?
No, we did a good job biting our tongue. That's actually in a roundabout way our most common questions. Well, if you're this, why aren't you Klima DAO? Like, well, in other days, people wish that was the case. Some days, I'm glad we're not. It's just a different offering. I don't think anybody today was specifically choosing anything. We're just talking about a project that's different than that one, and wish them all the luck in the world in expanding climate impact and what they do.
Yeah, it's like you said, it's just one of those sectors where the more people doing it with good intentions, hopefully it can just keep growing that space and creating a stronger network. so to speak, pun intended.
Exactly.
Yeah, they already got Mark Cuban buying Clean last year. They don't need any more help on here. Come on, just check.
No comment from me.
Okay, yeah, we should just stop. Good.
All right,
That's
thanks
awesome.
a lot.
Well, thanks a
guys.
lot for having us. I really appreciate you having us on. Thanks so much.
All right, thanks, Arbonauts, and enjoy your week, everyone.
Thanks, everybody.